Good evening, all. This is Fari Hemzi. It's 4:35 p.m. on Wednesday, 14th of June, 2023. Very, very quick notes. As always, we post our webinars here. There's one coming up next week. That's another repeat. That's a one-off. Has to do with our final release of ORB 4.9. Yes, there's a 5.0, but 5.0 is just really made for system houses. It's a 4.9 built for with a gang order bunch, 100, 200, 300 orders at a time of same asset. Usually MNQ, not NQ, obviously. That ratio being 10 to 1. But that we're going to be working on after we're done with what we're doing with Tiger Shark. I have nothing to report on Tiger Shark other than, hey, we're on tail end of some of the testing on its risk module. Not finished yet. But yesterday we had a good webinar. I had to do with how we trade using OTF, Gamma, and Nation Index. It was a very eclectic webinar. It was done by Peter Cook as advertised. Some of you were there. We put it also on our blog, and we predicted that it's going to be one of the most watched. Well, we're almost there. Typically these are done for weekly level webinars. This is done less than one day. In 21 hours, look how many hits it has. So it'll continue. It'll continue to go higher. So very good webinar. I've saved a couple of the screens in trade session that Peter put together on the fly. We're going to build it into, and we're going to fine tune it, really clean it because it was done such a fast way. And then we're going to share it with those in the chat room because that gives him a chance to look at what he's doing. Plus, on the on the Spot Gamma, we have no interest with the website. We're not part of it. Actually, we're a customer ourselves. But I found a couple of mistakes there. I fed it back to them, and they asked me, "What do you do?" I said, "Go to Seaboard. They'll tell you what I do." Because these are option guys, so they'll know. But anyhow, we will create, hopefully, again, not quota basis. We never do on quota basis, but as warranted, we'll create also email setup where Peter can hit folks during the day. If we see something unusual or from a Spot Gamma on their email, we can analyze, look at our charts, and then send an email out. Why? It helps us navigate in the room what that says. If you look at it carefully, I mean, we've been looking at the emails. I give you 2 emails a day. During expirations, these guys are very good, and strictly by numbers, strictly by empirical observations, which I like. I'm of that crowd. That's why I'm technical analysis. I'm not a big fan of quantitative. I'm good with quant too, but I'm not good with fundies. Fundies get it wrong a lot of time. Look what they did in 2008 and 2020. They wrecked people, and they couldn't see the signals from price and volume. Listen, when Admiral Tico beats them, that ought to tell you something. When he said, "Let's sell him, Daddy," on February 12th, if you look at the charts, it's almost like a suicide. But the doggy was right, and we owe him more than a few what do you call it, tomahawks. With that said, let's move on. So don't forget this. By the way, everything is recorded here. Again, we're going to post it through here. We changed the name to make it a little bit easier for you guys. YouTube channel and the blog. So this webinar is being recorded. It'll be posted after post-processing right there. Good. Blog, we do some stuff on it when we get a chance. The reason is because there's a lot of people there, dormant, and we're trying to just make sure they're also in the loop. That's all. Nothing more than that. All right, the charts. I'm sorry, econ data first. Well, today was the PPI, and it came in pretty much in line. No surprises. It's slightly lower on the month-to-month, but with food and energy, they were in line pretty much. Still, that was a good excuse to sell. To buy. Market rallied. We've been going up 3 days now. And as I posted on Twitter, this chart, this morning I posted, this was SP2. We were up to what 87, and I said, guys, be careful. This is time to pull back. Of course, we just juiced it up into uh, uh, FOMC, and you saw the drop. The intraday drop was pretty good. Here's the intraday chart. Oh, there we go. You could see wow what they did. What they did. Of course, we I had a early on short on. I'm sorry in the NQs because it moves faster. The points are faster. And because we are Momo traders, you don't want to sit there and guess. You want to trade what you see, not what you think, and you get more realization using NQ. Now, it's a double-edged sword. It's faster. It's harder. It could abuse you really fast, so we have to be careful. But once you went to beyond -4 signal, almost a 5 signal, it's a no-brainer. You got to buy it. You got to buy it, and buying we did. So it was an incredible day. Absolutely one of my best days in percentage basis. I don't want to get into dollars, but on percentage basis, probably my second or third day this year. And there's a percent gain. It was just incredible. And of course, I didn't participate all the time. I'm talking about actually closed positions, and so we're happy with it. By the way, one of the things we're adding to that risk manager is journaling. We're building journaling in there, where you do a trade, it pops and says, "Why did you do this trade for?" That's what I do by hand. It's going to help me. And then there are possible reasons for getting in or getting out. And thanks, Liz. I appreciate it. That was just lucky. I had no clue. Yeah, I took one trade at a time. I don't even look at the P&L. I'm just looking, trying to excel the pattern, what to expect and not to be greedy. When I lose, it's not that I didn't make money that day. It's just that I gave back, I was pissed off, I was greedy. No, kind of discipline says, contain your greed, the money will come, the progress will come, the profits will come. Just don't be greedy. Get what you can out of the market. Don't tell the market what you need. Market doesn't give a damn what you need. Take what you can and be grateful. And so that's what we did today. Anyhow, I was not in constantly. I had issues. There's all issues now. Some tax liabilities for non hedge fund participants in a managed futures. Doesn't impact me. It's actually on the client side, but these are new rules that have come in. You have to analyze it. So I had to get a couple of big time CPAs in New York who are advise firms in Wall Street who understand these things. Down here in Naples, they know how to do depreciation on your rental property. What the hell do they know about carried interest? So. And so I was on the phone with them. We're doing a couple of things with TradeStation. So I traded probably 60% of the day. This is probably enough. I don't want to trade 100% anyway. Actually, I got drawn in because of the post-Fed data, which was grateful. It was good. I had one loss there I had to cover, and it still came back and did it. If that loss wasn't there, oh boy, yeah, it was up there. Maybe it was my second day of the year, but I think it was third or fourth, somewhere in there. So I'm grateful. Very tired, but right after this, we got to get with the programmers on the programming side. So let's go back to, I got digressing here. I saw a comment there. Back to your PPI is here, was here today. Red report, mortgage apps. I didn't look. Let me look. Oh, there we go. They're up. Okay, so maybe real estate is coming back slowly. Maybe it's maybe the rates coming down. Yeah, giving him a signal. Fed share all that. Tomorrow we have Fed retail sales. This is crucial. These two, Mid Atlantic plus retail sales. That's crucial. You have New York there after that. Import export, industrial production. I want to see that 915. And you got inventories. That's a green report. Key reports are red. Okay. Balance sheet there. Consumer sentiment plus. It's not quadruple witching, it's triple witching. One Chicago closed, so we don't have a single stock futures. By the way, same issue was with spot gamma. They think they're not updated. Hey, things have changed. This changed about when Esposito left One Chicago, Mark Esposito, and joined HA. and I think January of 2016, within 9 months, they had to shut it down. Just the exchange wasn't making money anymore, and it's run by one of the cronies of uh, Tom Petty, not Petty, not Tom Petty, Tom Pefferty. That's right, a guy who owns Interactive Broker, the richest what do you call it man in Florida, the big backer of up to recently of Governor Ron Disaster. But he's pulling back his money now. I guess he's getting a little bit more careful. Yeah, but he's a very, very careful guy with money. Extremely tight. I think he came to this country, with like $24 in his pocket, or maybe $200 in pocket. I heard from Hungary, and he built the first website, not website, but a computer system, so he can disseminate real prices along with Stuart Townsend. Anyhow, I know of him. I don't know him, but I knew a couple of his lieutenants, Downing and Bill. I forget. Good friend of Admiral. Admiral introduced me to them. But anyhow, those guys cut the money off. Boom. So once Chicago went away, and this is triple witching. So options, futures, and index futures. No single stock is gone. Now there was a talk about bringing it back. I hear that some rumblings. Within SIBO, I don't know much. I shouldn't comment anyway. So, all right. So tomorrow we have a bunch of stuff to watch. Friday's expiration, and then plus consumer sentiment at 10. I'll probably won't do much in the afternoon. I never do on the. Actually, I'm trying to get to a point where I don't do anything in the afternoons. Most days, get to my work actually, and also break from trading. A lot of times I end up giving it back anyway. The other problem I have is they're going to pin the prices in the afternoon, and I think I have a couple of appointments here from contractors. Let them come in and do their thing, and I'll deal with that. So that's Friday. Okay. Next week is GDP, durable goods, a bunch of other end of a month stuff. Okay. So this is the third week. Next week will be fourth week of the month. After key thing to worry about. This is end of quarter. We have some rebalancing coming up in the Russell. Gotta keep an eye on that. So if Russell starts doing something crazy, that's mostly like it, or you could look it up. As Peter was sharing with me, Frank Russell and Company, who owns the Russell indices, they don't share. He's right. They don't share much information with anybody. But it would be a good idea to keep an eye when the rebalancing is. SPX just did their rebalancing. But this is, I think, this next 2 weeks you're going to see that. If you look at the spot gamma stuff that he talked Peter talked about, there were some charts I saw this morning from them with analysis from Peter. It tells me the next 2 weeks are going to be high vol, and the VIX also says that too. Let's go to a chart of VIX for a second to put that into perspective. There we go. I mean, look, we hit 13 here. Can't sit down here at that level. We're not going to go to 12 or 10. It's just unheard of. But we have the makings of a move down. We just see what's the catalyst. So I would be careful toward end of a month. Okay. Plus, you get the quarterly, which is end of the quarter, June 30th expiration. I think that's also a Friday, but that's just coincidental. Okay. But there's always a June 30th expiration, no matter what day of the week it is. So that would be, yeah, this is third week. I'm saying it's the third Friday, but not third week. It's the second, third, yeah. So we're gonna have 5 weeks here. All right, fine. What else? There's nothing else on calendar. Let's go to charts. Timer chart, outside bar, good shake, intraday. Again, if you look at the overnight stuff, you'll see what it did. We went from almost 4 sigma on the 30 minutes, which is a lot of professional hedges watch. It's an easy timing model, very easy. 4 sigma to almost negative 5 sigma. That's a 9 sigma move. But it's FOMC. That's the excuse. So they juiced it up and then they sold it heavy, just like clockwork. So we have outside bar. There's a divergence already. You can begin to see that. The internals are not keeping up. If you heard Gunlock this afternoon, he giving warnings left and right. I mean, I forgot who replaced the guy at PIMCO. I forget his name. Bill Gross. Bill Gross. Bill Gross was so. It's not Jeffrey. Jeffrey is a very methodical guy, numbers guy, and he keeps his head down. He just does come to CNBC, but look at the number of his predictions. They've been pretty much spot on. So I'm expecting some weakness. You can see it there. Look at this. Look at this. Look at this. I mean, look at this divergence, guys. There's 5, 6, 7 stocks that's controlling this index. So I think we could see a problem. Just be on the careful side. That's all I'm saying. Dow, huge day down. Now we broke down a little bit, came back up. We closed slightly up. I haven't changed my bias. We're still short Retirement Digest. We were stopped out yesterday during this gap up, but that was our target. There was a question like, why aren't you getting out of your Retirement Digest? That limit was for the trading part. Has nothing to do with my bias. I could put a second trade on from much higher level. Okay, that I don't have any restrictions with Retirement Digest. The trade has a restriction. The trade comes from here. Let's see. Let me log in here. Let me go over that. This also I want to show. And I appreciate the feedback. Okay, this is the trade got stopped out, but we don't have a quota on what to do with the with our trade with Retirement Digest. By the way, I'm beginning to add now our information there, so you can see when we went in. You can see where we are. There's a chart. Here's update. This is always on top. This is update this afternoon. Here's where we got stopped out. An exact timestamp as the email went out. Same language. There's nothing changed. It's just a way to memorize. I had too much going on. They're getting better and better. So I'm going to spend more time to make sure, at least going forward, we're clean. A couple of guys had issues with it. I appreciate that. I explained to them. But you got to realize you're not where I am. You don't see what I see. I'm trying to work everything, and it's just a lot. But I'm happy we closed HA options. Very little activity, and I just didn't have time. I am looking for a good option manager, but it's got to be up there. I mean, listen, I had a few good ones. Dennis Leontiev, Mark Esposito. I forget the other gentleman. I forget his name. He lived in Wisconsin. But the problem I have with all of this, including myself, we start good, we do well, and then we get lazy. And that's what the problem is. And my problem right now, myself personally, I'm time bankrupt. Between Orb, okay, between Orb and Tiger Shark, which is this one, PMT Pro, which is what we have these webinars with, and then indicators. There's a lot going on PMT Pro. Okay, so all right. Let me check something else. I just said that. Let me take a look here. Want to make sure we add. Hold on. Okay, I need to go. Oh, yeah, that should be 25th. Wow. Okay, I need to add these webinars. These what do you call it? These links to these webinars so people register, come in. Some people don't. They don't realize this is part of a package too. Except this is open. Okay, so we have improved back to where PMT Pro used to be. We're still short. As a matter of fact, if you go here, you'll see this one. You could see right up there. It says, what we're short from, and this is our PNL as of today, going back to early one trade that started in late 14, really closed in 15. As we went through that transition of changing some of the indicators, improved them, and we were taking a little beating there. That's okay. You don't move a straight line. Never have. So that's where we are. No excuses. We're going to kick ass and take names, and we intend to prosecute this war, as Admiral Tico says, at the time and place of our choosing. So, why? He wants his tomahawk. Again, don't forget the webinar from last week. The new one, this webinar as we're speaking, will go here. Let's go back to the charts. So, uh, Dow pulled back. I think the rates, the complaint today, if I understand it right, was the Fed is not doing enough. Hey, whatever you do, they're gonna pick on you. So I think they have done a decent job, but I don't like the balance sheet. The balance sheet is too big. But part of it is not their fault. They have to save the economy. We had a $20 million 20 million man layoff in one jobless claim. So they have to do what they have to do, and you cannot pull back and empty the balance sheet that fast. So slowly, as the economy improves and employment, people get re-employed, then maybe they can do some runoffs and go through maturity of their positions. But until then, numbers are going to be high. It's just nature of the beast. Anybody else I need to say hello to? No, we're good. Okay. Now, most importantly, remember I talked about this before. I said we gotta watch this. These two are showing a little bit of sign. You know what? I didn't heed the advice myself. That's my mea culpa. So I'll give this a day or so, and then we're gonna jump out with Time Digest. I thought today may be it, especially in the last hour. I was wrong again. It didn't pull back. They bought, and I went with it myself. I went and bought it myself. I'm not gonna go what my belief in the Time Digest call short term and shoot myself in the foot. Okay. Remember, I'm trying to again advise people. You can't trade futures with PMT. Well, you can, but first of all, you need an infinite account, and you need to have a very high uh, max pain tolerance threshold. It's not going to be easy. I've done that. Please don't go there. I wanted to. Right before I moved to Chicago, I did that with another fellow supervising me out of Chicago on the phone, and we did. First trade was massively great. I got cocky. Second trade, they cleaned my clock. You cannot trade the two are two different animals. These are daily charts. Those are 3 minutes, 5 minutes, 30 minutes tops. Totally different animal. Anyhow, the trenders. 1 second, please. I've completely stopped smoking cigars and no alcohol, no dairy, no glutens, no coffee. Okay, but my throat is more dry now than before. Go figure. Anyhow, the trenders 1, 2, 3, 4, 5, 6, 7, 8. Hello. All 8 are positive. What happens after that? There's a drop. Just like when all 8 are negative, there's a move up. So we're getting stretched and stretched and stretched. So we hit 15,000 on a cash basis. We hit 15.2 near the close on. Oh wow! Look at this. Oh my. We hit almost 250. Oh my. Hold on. After the close, yeah, hit 243. Wow. 15,243. Yeah. Oh wow. Excuse me. Well. All right. So. No fun. Exactly. Yes, 2,435. Yes, sir. No fun. I understand, but I'm losing weight. My skin getting a lot better, and my head is very nimble, and also I swim better. I'm floating in the water when you're swimming in terms of speed. Yeah, because you're so much lighter. Yeah. So, all in all, it's good. No complaints. I'm going to do it at least 90 days. See what the results are. And then by then I'll be in the right lane, if you will. Okay. Divergence again. We're getting divergence everywhere. So if you put this up, you'll see divergence again here too. This is Momo. Let's see if we go here. And these two are about the same, maybe slightly higher. But look at the Momo. Yeah. So short term wise, I think we have some bumps in front of us. This has gone up. Okay, it's getting set up. Not big enough yet, but this is not, what do you call it? This is not back then. What is this? This is 430 last year. This is April 30. This was obviously was 2020. So it's not there yet. The mechanical systems The trend following is buy and buy. So I think we're getting close to that. But remember, what was it saying? You could think about being short or anticipate that short, but your liquidity will not last the charts. So yeah, at some point you're gonna be throwing the towel. So bear off not to go there. Save your ammo to fight another battle. As I mentioned earlier, VIX is too low. That's another signal that's getting it ready. I mean, when was the last time you saw 17 on VXN? So we're getting there. Now, the question is, what's the catalyst? I thought the debt ceiling or whatever you want to call it, or what you call it, default, whatever you want to call that, depending how politically you're motivated. But either case was, hey, maybe we won't want to pay our bills. That will cause it. Of course, that went away. That went away, and I think both sides, the cooler brains came in and took over, and we got something. Okay, this is SQ. You could also see at a 200. I was talking to a very, very good junk bond investor the other day, and he says, "Listen, at $200 earnings for S&P, with this, we're at like 19 P right now. If it's a recession, you can't be at 19. You'll be lower. If this thing adjusts, maybe looking at 16 P. So we could be at 3,200 on S&P. I doubt it. He's thinking that's where this is due. Now, these guys are a little bit with a short bias, but I can't rule out a 3,600 price move. 3,700, somewhere in between these two. 32 to me is really, really low. But at least we have to retest this low. And that's 35.20. So 3,500 is the mean between those two. 34, 36. So somewhere in here, that's either 17 and a half. This is 17. That's 36 would be 18. Now, we don't know what the earnings are going to be, obviously, the forward earnings, but we'll start right after 4th of July. The Q2 earnings reportable in Q3 starts, so we got to keep track of how the EPS comes in. But there's estimating about 200, so we're way, 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 way overpriced, and that's also what Gondlach was talking about today. I don't usually read these things or listen to, but a few have had a good track record. To me, is who's the source. Just like news, I look at who the source is. So if I don't believe in the source, delete. Don't waste time. The front end drop is the treasuries. Front end drop in yield, and we rose higher up. So we're getting maybe a little bit more normal yield curve. Still inverted though. Still inverted. Look at the scale. Yeah, inverted there. Okay. So, but all of these, if you look at the CI on the yields, it's telling you where they're trying to go. The front end dropping, the mid to forward to from 5 to 30, maybe pulling up. Just look at the CI diffs. They're very non-emotional. They're numbers. Just looking at numbers. Look at 10-year. Yeah. So let's go here. Now this we have to roll this Friday. Oh no, we already. Oh no, Murray, I'm wrong. We got to roll now. Look at it cost. Yeah, it costs. So all right. So let's go and cross this. Oh no, not any. So we're still big long June. Come on. And short SEP, we have to be long July, which is end contract. Sorry, I should have done this before. I don't know how I missed it. Okay. And then this is U, I think it's V. Yeah, because November is X. Yeah. And then December is Z. Is that Zulu? Yeah. There we go. Let's see what this thing does. Look at the scale. Okay. Okay, there you go. There you go. There we go. So pretty much same chart, but we're still up there. This number, the lower this number gets, the higher the top is, the stronger the top is. Once this comes back, gets to around 0, that's the low. You see, for example, I'm saying, excuse me, I can't. My voice. You can't see it here, but we didn't exactly get to zero. But you can see the structure, and this is just a sigma channel, except we had to add a provision for taking a differential and put it in there. So I think you can do it on data one, data two also. Yeah, I think you can as a feed into uh, sigma channels. Let me check that here while we are. 1 second. Let me see what the input is. No, come on. Do we have an input? No. Okay, this doesn't allow you. I see. This doesn't allow you to change the input. Only turns you on and off for the Sigma 4. Yeah. Okay. Yeah. Well, we don't want everybody to do what we do. Yeah, exactly. Even with our own indicators, right? Okay. Rendezvous point is coming. Maybe we're going to go a little bit higher and then drop. Maybe tomorrow and then Friday, and then maybe Friday night they're going to sell into it. I don't know. Maybe something is about to happen over the weekend. I don't know. Again, I don't I don't write the news, as I used to tell CNBC. That's your job. Go and figure it out. All I'm trying to tell you is what the charts are telling me in terms of timing. We're very, very extended up, and all that's left for this thing to make a rendezvous point. So Lowry's up and down. Look, look where we were. What happened? We had a good day yesterday, almost at 90%, but no cigar. Okay. So these are the charts that we post. Actually, Admiral Tico does. If you follow Admiral Tico on Twitter, you would see him put these charts on. Let's look at what we did with Peter's stuff. Long. Remember, he plays the long side only on this. Yeah. So heavy duty going up. At some point, it'll get to exhaustion of sigma level. This is 2 sigma. This is Bollinger Band, simple Bollinger Band, 2 sigma. And then what you want to do is separation, like here. The sigma level is running up, price isn't, and that's the time to drop. So we're fairly close. Okay. That's that. This is swing. Okay, nations. We had this we talked about yesterday. And then I think there's a nations 2 also that he built. Yeah, we're trying to build these up a little bit. And then this is very useful. But we messed up here by the time we got to you guys. I think the chart, we changed it. There we go for these. I'm going to add this up, and then we're going to distribute it for those who have transition indicators with us. Okay, that's it. Let's go to last chart that you guys like, and which is, I got a point there for you to talk about. Here we go. Let's see. Let's see. Okay, now let me close this. Let me come to notice where the chart is. This is a 5. Hit update. Yeah, okay. And then I'll take your questions. Okay, we have definitely come out of that doldrum of 45 to 55, and this is saying we're going to actually move up. Other indicators are going to say we're going too far, but somewhere too is going to be a clash. But we're now clearly above 55. We're at 60 even. Oh, interesting. Okay. Oh, we might have pulled back down a little bit. Yeah. Because last night we were higher. Yeah, like 61. Anyhow, pretty decent indicator on the downside as it builds the divergences. Okay, looking from here to here, they're all divergences, not on the upside. Why? I think it's because we're just, we're a country of bulls. The majority of the money is on the bullish side, and so we're optimistic by our nature, and so that's where the economy, the perception of the economy is. Otherwise, people wouldn't be buying it above 200-day. So, I'm sorry. Hold on. Let me go here. Thanks, Dennis. What do you consider using TDX like? Yes, but I need to get there. Yes, absolutely, Randy. Yes, I do plan to do there. I'm just a little student of Peter right now. We signed up. Actually, no. TDX is no. That's open sign up. Nations.com. Yes, we do, but I gotta get there. So he's taking me under his wing to show me there. As a matter of fact, let me put it this way: I had been to Nation's website before a couple of times. Cash is the one who kept bringing this up, that we should have a discussion about that. And then yesterday and day before, in preparation for the webinar, I learned a few things from Peter. So I'm in that journey right now, Randy. So I gotta get there. But yes, I do plan to. Yeah. Okay, rendezvous point. Would you clarify? Yes, sir. Rendezvous points are from this. Hold on, sorry, wrong place. Let me go trace. Okay. Nope, no. Sorry. Let me go here. Sorry. As we get toward the end of the week, my hand gets tired of the mouse clicks. I have a little history of CTS, carpal tunnel. Okay, let's go to here. There we go. This is a rendezvous point. We have 3 stock RSIs. This is not my work. The coding is, I programmed it, but from open source of a guy named Tushar Chande. Okay, so if you go to the blog, we suggest you look at this book. We're not involved with them. There's no attachment to us. If you go down below, there you go. It's not here. Sorry. It's not there. It's on the suggested readings. Take on this one, this book. I don't know if it's out there. Oh, there's some. Okay. Wow. They want $97 for it because there's nobody selling it yet. This book is out of publication for a long time, at least about 20 years now. I forgot when he wrote that, but it should be down here. 1994, yeah. This is what got me starting to look at CI, to write something like a CI, because he measures all kinds of. This is a great question, by the way, Kelly. Very good question. If you can find the book, buy it. Okay, I have one copy. I have a hard time finding copies. As a matter of fact, I was in LA visiting a friend of mine in Tampa for Memorial Day in '99, and his dog chewed a portion of the book, of the cover. If I had a gun, I may have pulled up my gun. I would never do that to a dog, but this was serious. This is a serious book, and it's out of print. You can't find it. Anyway, I was very pissed off, but it did not get to any of the pages. The content was there. But after reading this, again, one more time on the flight back to LA, there is a gap in the technology of development of momentum indicators, and kind of ends where this guy takes off and he writes this thing called the stock RSI. Inside of that, it explains how you get there. So it's open code. I took that, put it in TradeStation, and it's one of our packages. I think it's part of our pro package. It's not just the indicator, just like Sigma channels. It's the way we also apply the rules to it. You can write code. You can sit down and write code. Listen, TradeStation programmers do that. Ask them how to interpret, how to trade with it. They couldn't trade their ass off of it. They will know. So what we came up with was the 3 different differentials in the look back period. So you have a fast one, which is the green. You have the medium one, which is red, and then the slow one is white. White is kind of neutral. Okay. When they get to rendezvous point, that means they meet up here together, or down here somewhere, like here. A lot of changes happen. Like here, for example, these two. A lot of changes happen. The reversal is almost certain. So we look for a rendezvous point. Here's a rendezvous point coming up. Between 80 and 100, or 80 to 90, I'm sorry. You're not going to see 100. From 80, okay, to, this is 80, that line. This is 90, or negative 80. I'm saying, 20 and 10, okay? Again, we never get to 0. You may touch it and come back. One of them, not all. And you may get to 100 and then pull back. As you can see down below is more bias in the downside. Why? Fear. Fear is far more motivator than greed. So right now we're setting up for greed, the topping and the price here. And you could see 2 of them are already there. This one's chasing it. That's why we call rendezvous. All 3 of them getting together. Usually it's not the same time, but fairly close, as you can see here in the past. You could see like a day off for maybe 2 days. Here's much bigger. It actually failed. Not all of them got up there, and this was a weak market. Absolutely, this was a weak market. These are more. Uh, uh, typically, these are more setups that we have that they should be in this fashion. That we accept this as rendezvous. Like all three are above 90 or close to it. Okay. Here it failed. Didn't really get there. This was a even bigger failure. They were at the same time they weren't there. So we'll see. We'll see where this takes us. But I would probably say this was this. By the way, you get it, Kelly, on the what do you call it? On the your trade station. As I mentioned, I said let's finish your trade station, Kelly, as incentive. I'll comp you. This indicators for a while, so you can play with them. And this is a good one to have. This one. That's part of, I think, Happy Pro. So when you're ready, I'll show that for you, and you can keep an eye on it. You'll see the cycles. Boom, 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 boom. Fear, greed goes back and forth. Right now, we're not there. We're shooting for that. Having said that, when we get to this tail end of the push, as provided with the trender, for example, okay, you can see where these are as a percentage change of the 50 and 200 against the last price. If you look at these are all on the these are all on the buy. You could see this could get exponential, okay, kind of a parabola, and that could get us there fast. And then usually we're like within a day of the top, okay. So that's what we do. So let's get finished your computer, sir, so we can get you some of these as a comp. You could play with it. I'm saying. That's a good question. Let me the charts could do that. Okay, we just have to bring the data in. You're talking about March 29th? Yeah. So we can do this. We can try it quickly. Yeah. I was going to say, I misunderstood the question a little bit, but again, by the way, these are for SPX. It's not for NQ. Why? It has to do, in terms of major market indices, the market is really SPX. Why? It's 80% US equities, market cap. NDX is a market cap too, but that's a smaller, concentrated, tech biased name. So I can do it for you, SPX for you. Hold on. We just simply go here and we go edit symbol. And you on March 2009? Okay. Yeah, what happened to that? What do you call it? That gal who was talking about 600. Oh God. The what do you call it? Doolittle. Yeah. Now she works for Bloomberg. Yeah, she was an analyst for some brokerage firm, and they were actually paying to get to for. That's what CNBC does actually. If you pay, they'll invite you to come and talk. It's not kosher. I realize that, but anyhow, long story. What at one time I was bullish, and right after a comment from me on CNBC, she came out and says we're going down 600. So we call it SPX 600 gal. This one was 666. So hold on, let me see if I can. Hold on. How do I get the no? No. Let's do it here. Much easier. Hold on. No. Yeah. So we go to let's say 4 1. Nope. Oh, 1 2009. That should do it for us, I think. Hold on. Let's see. Let's load this stuff in. 2 years. That's a good question, Anita. Let's see. Let's load it up. There you go. Okay. This is 666, right? That's the low. Here's the picture. Let me take a snapshot. I'll send it to you. Okay. You could see the pressures down there on SB2. I mean, this is pulling up. It's telling me we're near the end. So we start buying. As a matter of fact, there's a webinar to that effect on the Saturday before the low. Low was put on a Monday. Okay. There's a Saturday. Go to webinar. Go to Let's go to, hold on. Yeah, and remember, there's no anything. Educational webinars, there is June 30th. No, hold on. 2011, 2009. No. Okay. There we go. So December, Sep, yeah, April. Okay, hold on. There you go. Go watch this one. You're gonna freak out. Go and watch this one. You're gonna freak out. I called for this. Yeah, yeah. That was one, and there's the other one here. I forgot which one it is. Which I said, look at. It's after this. It's like in the 12s, I think, or 13s. I said, look at national debt and demographic change. They cross, and it's going to be around 14 and 15. They said, what does that mean? I said, this country is changing in that time. This country, as we know it, is changing between 2014 and 2015. Those of you who follow politics, go and look, see what happened. It's one of these webinars. I forgot which one it is, but it's here. Between 12, 13, it was like 2 years in advance, 3 years in advance. I said, watch the demographics versus debt. Of course, we don't have the crazy debt we have now. Okay, okay, but imagine what. And I read in some book that as for not even about U.S. in general, they were looking at the banana republics. They were looking at third world countries and so forth. And that was so out of curiosity, I plotted. I took a look. I freaked out. And but anyhow, that's this. We're taking away from the subject. Go on 2009. You can go take a look at it. Okay, Anita. I'll send this for you. Hold on. So it's SP2 stock RSI. Stock RSI. March 2009. Okay, I'll send an email to you. Anybody else wants to, would more than happy to send me a request. We'll send it to you. Is there? Yes, of course it is. Yes, Mandy. It is highly possible. That's why I didn't close with Time and Digest. Yeah, because I want to show it from higher level. Listen, at the end, I'm going to win. Issue is, do we have the firepower? That's key. So, but and I know when to do it. It's just that this one just went nuts on us. So yes, obviously. Look at my record. Yeah, I'm going to continue to stick to what I know. No experimentation. And one of them is you stick to your guns. What are my guns? My indicators. What the indicators show? We're extremely pushed up. The more we go up, the bigger the fall is going to be. Yeah. But we're beyond the point of getting long here. That's the point. So we may just get a little bit exhausted and then short it. Yeah. We have done that before. Landy. Yeah. We've had two. We never. I don't think we've ever had three signals, but we had a few double signals in one market call with Time and Digest, where we haven't changed our position. Yeah. The problem is this. Let me be very upfront, and this is important. This is a very good question, guys. People don't listen. That's the problem. They don't read. They don't sit and do the videos. They don't even keep track of the emails to come to these videos. So, what do you want to know? If you read this one, this is how this works. Okay. In the past, you should watch that video. In the past, we have done several two signals. That is one bias with Time and Digest, but twice we have tried it. Not more than that. If the second one doesn't work, we're done. We cover. We wait for another setup. The key is not. Remember, this is 170 trades. 170. Yeah, it's not one trade. And how do you keep up? And how do you cover? You make a mistake, you cover because you have faith in yourself. If you don't have faith in yourself, it says, "Oh, I got to win this one. I have to win this one." Guess what happens? You got to block your account. No, you got to stop and say, "I'll keep my ammo dry. I find another battle time. Yeah, I got to find another battle. I will do that." So, well, we have done that. Two trades. One was recent, probably a year ago, in one signal. So, yes, absolutely. Good question. And by the way, launch commands don't come from me. Yeah, I mean, you got to realize launch commands come from Admiral. Yeah, I'm not that smart. I'm just push the buttons here. I'm the monkey. He's the boss. Yeah. Hold 9 pounds of him. Well, 9.5 pounds. Ask Dennis. Dennis will tell you. Yeah. Admiral Tico has a presence, So when he says, "Daddy, let's go," we go. Any other questions for me? I'll send you that chart right after close here. So again, watch out. Look where we are. Everything is signing up, showing to a pushback. Historically, it has, but we cannot pinpoint which day. But we're very, very close. Once we get there, we do it. Remember, again, we're event driven. We're not quota based. Okay, so we got to see the event. Any other questions for me? Okay, thank you all for joining. We'll put up automatically, if you're in this system, you'll have a webinar reminder for next week. Okay, which will be next Wednesday, and then Tuesday I'm doing the ORB. Thanks, Greg. Appreciate it. I'm doing the ORB this way with the ORB. Okay, and what Peter did. Now we have a. There was no way for us, both of us, to talk at the same package. We would be too tired, too heavy, too long. We have two documented webinar on how the package works. Good and bad and ugly is just spelled out. Obviously, I've got to admit to you, Peter is a more contributor to this package than I am. I get too busy with Tiger Shark during the day, but he really carries the weight. He's the, he's the chief moderator, and it takes a lot of work, but he's good at it. He's a ferocious reader, highly analytical. I've seen it. I've seen it from his worksheets. I've seen it from his Excels. I've seen how he writes things. So, and we're just hoping that we can exact a little bit more from him by adding this Spot Gamma emails, kind of analyzing it for the members there to see what kind of day we're in, what it looks like when we get close to certain areas. And also, I'm doing it for selfish reasons. There's something there for me to read and learn, and I don't want to stop learning. The day I stop learning, I'm dead. Not doing that. Yeah. Learning keeps you young and on your toes. Thank you, Dennis. I appreciate that. You're too kind. Yes, yes. We'll go through that. Yes, absolutely. Yeah. And if you need access here, I have no problem. Have access, Randy. Any of you guys, whether you give it a try, just send me a note. Not a problem. Well, we do a week or 2 week access for you guys. Take a look. No obligation. And we say that very, very upfront, because future is not for everybody. Yeah, and you have to start. Think of it as a pyramid. You have the stocks on the bottom. Okay, maybe 50, 60, 70%. Then you have another 20, 25% of options, and there's like 5% on top. And that was my growth. It took me time to get to futures. And believe me, the day my first option in futures trade was in, my first stock trade was in I think Dennis would remember, Silver Crash, March of 1980, the Hunt brothers. My option trade in a very small nibbling, just learning and reading and understanding Black-Scholes and programming it myself on a little HP 65 or 67 it was, actually 67, at work at Northrop, was in like summer of 80, because I had all these stocks I bought from my dad, and they were up 20, 30, 40, 50%, yeah, in one summer. Because remember, that was 729 when I bought it for him. And he would always, I would get so embarrassed. He would tell all his buddies that my boy is so smart. I said, Daddy, stop. It's just I was lucky at the right time. Well, my friends in New York said, get in now. Bless him. But I guess I was a monkey. I just pressed the button. At that time you had to pick up the phone and call your broker, and that time was part of the herd. It was Merrill Lynch, actually. I called the guy at Merrill Lynch, and he said, yeah, go ahead. Come on, bring me a check, but I'll start the account for you, and we got to get you in on the trades. And I said, well, can you get me in now? He goes, oh yeah, I'll put it in, not a problem. I said, I don't have an account number. He goes, don't worry about that. You're good for it? I said, sure. The next day we took him a cashier's check. So, and back then he had 5 days to settle. So he knew he could, he was pulling it off right. So 729 we went. About 3 months that summer, 4 months after that, I wanted to sell, and the guy said, my broker there, John Domboski, actually in 2000, I was doing the put call ratios. He called me out of the blue. Yeah. And he came to one of these webinars, but back then we didn't have go to. We had some other webinar. But anyhow, he said, "Don't sell it. Don't sell it. We'll sell some options against it." I said, "What the hell are you talking about?" He goes, "We're going to sell some calls." I said, "What is a call?" So that's how naive I was. I didn't know. Then futures. My first trading futures was. Are you listening? March of '93. See a gap from 1980, and then like when we got really sophisticated, I thought I was like, so I was trading XMIs options in my office in Century City on avenues of on Santa Monica Boulevard and Century Park East. Okay, in right before the Gulf War, I was trading XMI, the major market index, which is the equivalent of Dow. It was running options on Dow and using a software called Option View that does the what do you call it for you option chain. So I was doing that. Still pretty scared. It wasn't until 2 years later, which I had an algorithm called neural nets, using neural nets to trade the bonds. I was trading bond futures. Forget NQ. This is 49 to 1. Bond futures are 100 to 1 leverage. 100 to 1. That means if you're off by 1%, you'll wipe out your account. Here you have to be off by 2%. I was off by, yeah. I didn't even know what I was doing. Okay, I was and then I didn't even know what there was TradeStation. And we wrote this thing on a computer called the Spark Station. It was used a lot at NASA. It was used a lot at missile silos. Yeah, you have, of course, different versions. You have a special access. It's used on the nuclear submarines with the what's called a GPU that does the computation by a company called Mitex out of 128 Loop in Boston. Those go on the submarines because they compute the launch code. I mean, not launch trajectories. Yeah, for the SLBMs. So we wrote that from scratch. I was so frustrated. It took us 6 months to plot the chart. Okay, it runs Unix and it's not timestamp. It's not a real-time timestamp. Okay. I said, my brother was programming that, Corey, and I said, stop. I need something faster. I don't have that kind of time. That's why I got involved with TradeStation. We found that because TradeStation could read the neural network's weight file. Weight file tells you what the outcome is going to be, is kind of the situation. So, and I had no clue. Now, when you go to, I've never done Forex, but that's the progression I've had. Now, look at the population. You have very much in the bottom on the stock side. A lot of people are in stock. 50% of U.S. households are in stocks, either directly or indirectly. Okay, or they trade or somebody trades it for them. Then you got options, which is probably 20%, maybe 25%, something in there, and then 5 to 10% on top of futures. So futures is a very, very challenging environment because of the index. And look at the moves. Look at some of these moves are. So, oh, geez, good for it. Oh, you bought in 79. So that's a good trade, Thomas. Yeah. The problem was the Hunt brothers. They tried to corner the market. Yeah. You know what I did after that? I went and bought Prubesh. They wrecked Prubesh. Prubesh was a broker. I bought it on pennies. And my dad was telling me, well, as a percentage of value, because there's a book value. My dad was saying, do you know what you're doing? Who's this company? I said, Dad, these guys almost went under. I'm buying it. And please give me a chance. In 2 months, it was 100% up. Yeah. Back then, it's not easy to make 100%. If I show you what it is today, you're going to say I'm a thief. No, I'm not a thief. It's a futures market. It allows you. Back then, it wasn't allowed to make this kind of money. In 2 months. Forget 1 day. But look how things have changed. Why? Markets are more efficient. You have internet, you have CPU, you have memory, you have things we didn't have back then. Listen, I sit here in my pajamas in Southwest Florida. I'm talking to you guys globally, and we're trading together with zero delay using the cloud. None of that was available. Back there, I have to call, get a bid ask code, go back to my HP 65, look at the over and under. Now, then look at my assumptions. Things have changing. You could program all of this. There was no feed. You know, the price is changing. Your delta is changing. Your road is changing. All of this had to be programmed. It was crazy times. So bravo, Thomas, bravo. Yeah. So anyhow, guys, been a long few days. Let me get some rest. We got to fight another couple of days. Or get a surprise maybe tomorrow, guys. I'll come in and say I'm not trading for balance the week. Why? You need to take the big. You need to take the big game home. When you hunt down the big game, you got to take it home. You can't leave it and lose it, but give it back. So I gotta be very, very disciplined tomorrow. Today I wasn't. Why? Because they pulled me back in. Remember the last scene in Godfather 3 in the kitchen? Yeah, they pulled me back in just when I thought I was done. Yeah. So exactly. They all do, isn't it? Yeah. And that's the magic of this game. It's just incredible how you could be above it. Yeah. And maintain yourself above it. Or you lose your sanity. That it's a binary event, Dennis. You know it better than I do. By the way, Dennis has traded futures more than I have, so I respect his opinion. Talk to you guys soon. All the best. See you next week, same time.